All right, welcome back everyone to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everybody?
Man, the stock market feels choppy today, man. I mean, we kind of like start dipping toward the end of the day. I think the Dow was down to like 0.3%. S&P was down like 0.22%. Nasdaq actually dropped the most, 0.66% today. So I don't know, man. I feel like we started the day kind of good, and then it just like things kind of just turned around and went to the other side. But the semiconductors and the chip sector, I mean, you see how Meta was moving today. Meta was up like 9%. Like that's crazy. Their cloud business and is doing really, really good. I mean, they just announced it recently. So they're doing really good with that one. Crude oil, man, thank you, God. Oil is finally falling to 2%. Oil is finally below $68 per barrel, man. So hopefully we can start seeing some relief in the pump now, because those gas prices was ridiculous. That was killing me, man. But overall, man, the I was looking at some of the employment job. The ADP surprisingly reported private sector job increased by 98,000 jobs. I mean, kind of short a little bit of consensus. And the consensus was like 99,000, something like that. But I mean, still, we added some more jobs going to the end of the second quarter. But overall, man, let's do a breakdown, man, because I can't believe it's already the second half, July 1st. June definitely beat everybody up. If you look at your portfolio in the month of June, unless if you're doing some puts, just close your eyes because you definitely got beat up a little bit. But overall, man, June is over. Now we're moving to July and August. What are your predictions? I guess let's talk about the first half first. What have you seen, and then let's talk about what you think about the second half is going to be.
Yeah, so the first half of the market was relatively good when you take a look at how the indexes finished overall. But I will say that there was a lot of concentration in a select area of the market, and that is memory and AI infrastructure. So when we look at the first half, um, just taking a look at SPY, SPY was up roughly about 10% or so. The NASDAQ 100 was up about 20%. Now, the outperformers that have not got a lot of attention, now we talked about these a couple months ago. EEM up
Yep.
25% and
Yep.
IWM up 22%. So Russell and EEM both outperformed SPY and the NASDAQ. And I think going back into late last year, we talked about at least allocating
Yep.
something to those sectors of the market, whether it's in your 401k or whether it's in your your Roth IRA or somewhere where you can kind of build long-term momentum has proved to be a pretty good
Oh
strategy.
yeah. Oh yeah. Absolutely.
So EEM again, we saw this last year as well, was the outperformer when you compared it to SPY. EEM, outperformed SPY in 2025. And so far in 2026, we're seeing a little bit of the same thing. Now, two of the biggest drivers in EEM obviously are SK Hynix, Samsung, and Taiwan Semiconductor. So, and also ASML, which is a name that we talked about months ago that just hit an all-time high. I want to say either today or yesterday.
Yep. Yep.
So all of those names still concentrated in the AI sector of the market, but they have been the clear outperformers so far this year. Um, when we talk about some of the underperformers, now when we look at the Nasdaq 100, actually, Nasdaq 100, I think that the clear outperformer there was SanDisk. Like,
Absolutely.
I don't think
Absolutely.
anybody comes close to what SanDisk did for the first half of this year. Micron was another great performer in the Nasdaq 100 so far for 2026, and then Intel was also one of the
Intel.
top performers in the Nasdaq 100. So when we look at the overall market, the only thing that I will say is that you know you like to see broader participation, but at least for the most part, almost everything has been concentrated in the AI
Yep.
infrastructure memory names. But if you had a little bit of IWM or a little bit of small caps and international exposure, emerging markets exposure, you probably are faring pretty good compared to somebody who has everything in like SPY or everything in like an index fund, attached to the S&P 500. So diversification does help you to a certain degree. So
Yep.
just want
Yep.
to put that out there. But
Yeah,
y-
I definitely agree with you, man. Like some of the winners for this half at least, yeah, the EEM was pretty well. Like my portfolio is up, I think it's up 16% for the year, which is not bad. I mean, just adding EEM in there, you know. So it's definitely been a good move to do that in the beginning of the year. I mean, we've seen kind of rocky couple of months there, right? It was kind of like wasn't doing good, especially during the war or whatever. But
correct.
we came back and we started making some good headways and stuff. But yeah. But let's talk about some of the winners, man, like individual stocks at least, like some of the ones that you like in the first half.
Yeah, so the winners I think that we've seen so far, um, SanDisk was one, Micron another one, Intel's another one. A couple other names that have kind of been flying under the radar, that I think I posted this on my Instagram not too long ago. Um, Lam Research
Lam Research, yep.
and Applied Materials
Yep.
and also ASML.
ASML.
They don't get a lot of the headlines when it comes to AI, but no one builds chips without their equipment. Like it's impossible.
Mm-hmm.
And then you throw in, I think I said Lam Research, ASML, and Applied Materials.
Yep.
Those three, you can't get anything done in the chip sector without those companies. And all three of those companies have now hit all-time highs.
Yep.
And again, it's a testament to the need and the demand for their product. So it's one of those things that, we talked about this back in what I think it was in January,
Mm-hmm.
and they don't get a lot of the headlines. They're probably not some of the sexiest stocks, but they have been pretty durable as far as how they've been compounded. And if you go look at their earnings and go look at their balance sheet and go look at the quality of the company, to me, those are three really, really solid companies when it comes to the build out that we're seeing in the AI infrastructure
Yep.
space.
Yep. Lam Research up to date 120%. That's year to date. This is just half of the year. You know what I mean? Like year to date is just 120%. You mentioned applied materials. Applied materials. Let's see how applied materials AP. I think they're up also.
The symbol is AMAT, AMAT.
MAT. I'm thinking about APLD for some reason.
Yeah.
I mean, they're up 145% year to date. I mean, and since last year, they're up 259%. That's ridiculous move, man. Like that is crazy.
Yeah.
That is ridiculous.
And again, I think those are not the names that you see for right reasons. Like let's be real. But sometimes if you dig a little bit deeper and you look under the hood, you start to find other quality names that are out there that you can find. So
Yep, yep. Let's talk about some of those magnificent seven, man. Like I'm talking about Microsoft, Apple. Like we've seen those kind of lag a little bit behind, also, especially Microsoft. I've been trying to see when is Microsoft going to hit all time high. Out of all the magnificent sevens, I think Microsoft probably one, maybe two that haven't really hit the all time high just yet. Because if you look at the all time high from August 2025 was 522 or 524. I mean, they haven't even gotten close. They got to about 480, maybe 450 around that area, and they got kind of smacked again. So that's another stock that I'm kind of keeping an eye on that hopefully we get some momentum and move back to the all-time high. So um in my opinion, like there's definitely some rotation that happened out of those magnificent seven into kind of like the stock you're talking about, like the SanDisk, the ones that actually support the infrastructure of AI directly. So that's for me, that's been interesting. Let's talk about some of the losers, man. Some of the ones that just didn't go anywhere. So I am surprised. Have you seen Nike? I was shocked to see Nike actually was moving the way it was moving. I mean, like they reported earnings and then it just started moving. I was like, wait, what happened to Nike? I mean, year to date they're still kind of down, but overall, man, like I don't know, is recovery on the way? I mean, the new CEO is talking about it's going to take a while to kind of get things up and running, but I mean, they're starting to move a little bit. I think we talked a lot about the B2C businesses that were kind of getting hammered, right? So you talk about Nike, the Targets, the Starbuckses, all of those, the one that actually do the B2C. So yeah, let's talk about some of those losers, man, and let's see how which ones we can find some gems in.
Yeah, the Nike one, I'm actually surprised Nike was up today. Um, I didn't see anything um, in the numbers that made me optimistic moving forward. The stock did get down to $37 in the after hours.
Yeah,
It hit 37 and then it kind of moved up higher. So,
yeah,
but I am still not a fan of Nike personally, but could this be the start of a potential turnaround? We'll just have to wait and see.
yeah,
But there's just a lot. I guess the China numbers might have been better than people expected. Maybe that's what helped the stock move higher. But for the most part, I was not impressed. Some of the biggest losers from 2026 so far, Intuit has been a big loser. And we talked about earlier, I guess we were calling the SaaS apocalypse, where every software company was just basically getting hammered. CRM was getting hammered, Palo Alto was getting hammered, CrowdStrike was getting hammered, Planeteer was getting hammered. Like anything, ServiceNow was getting hammered. Anything associated with software was getting hit pretty hard because Claude and Anthropic were releasing all of these updates where it seemed or it gave the impression that Claude could do what some of these companies could do for a lot cheaper. Snowflake got hammered. Like everything in the SaaS section was moving down. So software, now when we look at technology as a whole, technology did pretty good, but the software sector of technology didn't do too well. Just did not do too well. But as we started to move through the year, we started to see some divergence with some software companies that offer mission critical services. One of the biggest ones was cybersecurity.
mm-hmm.
Cybersecurity in the software sector over the last couple of months has performed amazingly. I think Palo Alto Networks hit an all-time high recently. CrowdStrike hit an all-time high recently. And then we saw other names like Datadog and Snowflake report their earnings, and some of their mission critical software showed a lot of promise.
Mm-hmm.
But there are some companies in that sector that are still struggling. ServiceNow still struggling. CRM is still struggling. Adobe seems like they're pretty much cooked. I mean, I don't know what to expect from Adobe anymore going into the second half of 2026.
Right.
But I think we stressed this. We said mission critical businesses in the software space, most specifically cybersecurity,
Cybersecurity.
could bode well. And so far, we've seen that, and some of those names have been rewarded. So yeah, another loser we've seen in the sector was MSTR.
STR. Yep.
I think MSTR is down what 75% in the last year. Um, Mr. Michael Saylor has said that he would never sell his Bitcoin, but he's had to sell Bitcoin to, fund some of the cash flow.
Yep.
I think because again, they're borrowing money to buy Bitcoin. So they owe investors money at some point if they don't want to default. They don't have any cash flow to support their Bitcoin buying. So this is a highly leveraged company. And I think I said this before, even though I didn't have the wherewithal to short them, but borrowing Bitcoin or borrowing money to fund Bitcoin is a dangerous business.
Yep.
Very dangerous business. And as the market has reached all-time highs, MSTR has just been in the dumps. We talked about a stock that was what, $400 a share not too long ago, sitting at what, 90. They had a good day today, but sitting below 100 now.
Yep.
So they are one of the biggest losers. Now, does Bitcoin recover? Does the business turn around? We'll just have to wait and see. But yeah, they have been one of the biggest losers in the Nasdaq 100 so far in 2026.
Right, right. So again, MicroStrategy, man, to go from a software company to like just all of a sudden becoming this huge treasury, if you call it Bitcoin treasury, and the way they went about it, like if you think about it, they bought it, they bought Bitcoin using cash, debt, they even raised capital to be able to get more Bitcoins and stuff. So again, if you believe in Bitcoin, MSTR will be a good investment. But as we know, when Bitcoin go through its cycle, it takes 2, 3, 4, 5 years before you can see the next level moving up. Now, I'm not saying it's going to take that long for Bitcoin to move back up, but if you think about it, it takes a while. So if you're an investor in MSTR, you're probably questioning yourself right now. Like, is this a stock me worth holding for the next 5 years? Is this an opportunity to buy it at a cheaper price? Or is this kind of like, it's going to be like this for a long time and I won't see my money again. So again, it's one of the most interesting stocks out there, and I think a lot of people are still watching it and stuff. Again, like we'll see what happens in the next few years with this stock.
Yeah, I hope they figure it out. But I think I think in the long run, if from a financing perspective, I think the biggest thing is going to hurt them is if they have obligations that come due and Bitcoin it hasn't moved, they're gonna have to sell more Bitcoin. That's the problem. So because when you're using leverage and you're borrowing money from investors, especially I think they're using like preferreds. I don't think they're using bonds. I think they're using preferred stock.
Yep.
So these preferred stocks, I don't know if they pay any dividends or not, but preferred stock are almost like bonds in a sense. You owe people money and you just
Yep.
keep diluting the company. So, we'll see how it plays out. But the longer Bitcoin doesn't move and those obligations come due, the worse it's going to be for them from a business standpoint.
Absolutely. Absolutely. All right, man. I think we spent a lot of time talking about what happened during the first half of the year. So I want to answer, I want to be able to give an answer to people about a question that many people probably asking. Where is the money going in the second half? Where is the opportunity lies? Like, where are we going to see the AI ecosystem? What's going to change? Is it going to continue to be the same now that we kind of brought in memory? What is the next level? So where do you think opportunity is going to lie in the second half of the year?
Yes, I think for me, what I've seen at least this week, and we saw a little bit of this last week, is
Mm-hmm.
software has been getting a lot of good inflows
Yep.
from the technology sector. Now, the reason why there is some divergence here. So when you look at XLK, which is the technology ETF, that is heavily weighted towards non-software companies.
Mm-hmm.
A lot of it is heavily weighted towards a lot of AI companies because XLK, I think so far this year has done about 32%.
Yep.
IGV is a better benchmark for the software sector compared to looking at something like XLK. So to me, I feel that some of the software names are going to start to get some inflows. I think that the cybersecurity sector to me is still one of my top picks going into the second half of 2026. Now, some of these names have been on quite a tear, though. Like Palo Alto Networks and CrowdStrike have been on a tear.
Yep.
There's some other cybersecurity names that hopefully might start to play catch up. So we'll just have to wait and see if those names can execute and deliver good earnings moving forward. Because Palo Alto, CrowdStrike, from an earnings perspective, from a balance sheet perspective, they are the top dogs. But you got other players in there like Fortnite. You've got like Zscaler. You've got like who else is in that? SentinelOne. You got Twilio. You've got Cloudflare. Like you've got other smaller names in those sectors, and if they are able to deliver on their earnings, to me, I feel like those are going to be the names that could see some inflows moving forward.
Yep. Yep.
Snowflake, and Palantir, two names that have also had a pretty good second quarter of 2026. I think Planeteer was up what 9%? today.
100%. Yep.
Yeah.
Yep.
So, some of those names are, in my mind, mission critical AI businesses. It's just a matter, can they continue to execute? And, from a valuation standpoint, they've come down from their highs tremendously.
Tremendously. Yes.
So, like I think Planetary got down to like 105, 106.
Yep.
That to me is an attractive stock price looking at how the business has been over the last couple of months. Um, yeah, so I think software could see some leadership. Small caps I still like, but I do feel that small caps, one of the biggest things about that keeps me up at night with small caps is if we get a rate cut, I mean a rate hike,
Rate hike. Yep.
small caps are going to get obliterated.
Oh yeah. Oh yeah.
Yeah, they're going to get obliterated. So that's something to watch that could hurt small caps. Obviously, the whole market I think is going to get hurt if we see a rate hike, but small caps are going to get hit one of the hardest if we do. So that is the one thing that makes me a little bit wary about small caps is what happens with rates going into the back half of 2026.
Yep. 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 But again, I think there's a lot of opportunities lying in the second half, and I agree with you. Like I've seen, like if you guys go look at Microsoft today, between yesterday and today, Microsoft was moving, So again, keeping an eye on some of those stocks that got beat up. And you actually gotta ask yourself, if you like those stocks when they were high and now they're down here, like that might be an opportunity for you to start looking into them. So again, keeping an eye what's the opportunity coming up. I think AI is still gonna be a big talk going to the second half. I think the memory is still going to be a big talk and a big opportunity going to the second half. And now we might see some of those other software companies joining also. So your Microsoft, your Oracles, your ServiceNows, all of those that might start be joining the party also. But other than that, I think we could move on to Meta. I think what Meta actually ended up doing today is create that cloud compute business. I don't know. Are they like I feel like Meta's coming for everybody's business. Do you see what I mean? Like they started with the chip, they started creating their own chip, right? Now they're coming for the cloud computing business. I mean, now they're gonna be in the same arena as Amazon, Microsoft, Oracle. So it's like they really are going to that area. So what's gonna differentiate them? I guess let's talk about that part first, that business transition, and also let's talk about what's gonna differentiate Meta from all the other ones.
Yeah, so this is a very interesting pivot for Meta to me. Um, I don't know what the long-term plan is, to be honest with you, because looking at what they do as a business and how this kind of fits into their ecosystem, I can't call it, right?
Mm-hmm.
But I think the one thing that we did talk about is that the demand for compute as AI gets broader and broader use cases is going to grow. Like I think we talked about them creating like futures to be able to, you know, you be able to buy compute futures on the market and things like that. So
Yep.
that tells me there's a marketplace for that. And I think what Meta may have done is what they're trying to do is that if they overspend on compute, right, is to be able to use the excess compute and sell it to other people who might need it.
Mm,
That might be the play. It's like, okay, if compute is going to be more expensive over time, let's just assume that there's going to be more demand for compute.
yeah.
We want to buy up as much compute today at today's prices if we
Yeah.
can lock in today's prices. But in the case that we overbuy, we can rent compute to other people
Yeah.
that can buy it from us. So maybe that's what it is. Could it be a new revenue stream? I mean, the cost of energy and a lot of things play into that. We'll just have to wait and see. Could it be investors a little bit wary about how soon they're going to start to see return on investment with all of this AI infrastructure spend? Because that's what's hurting a lot of the mega cap names. They're dipping into free cash flow, which is going to be negative for some of these companies for the foreseeable future.
Mm-hmm.
They're going into the debt market, which is putting liabilities on their balance sheet from an interest expense standpoint. And what they're betting on is that these bets today are going to accelerate earnings in the future. So far, we don't know whether that's going to be the case yet. We don't know, but they're spending the money today. and they're borrowing the money today. We don't know what happens in the next 2, 3, 4, 5 years. And if investors don't see return on investment soon, these names could be penalized.
Right.
That is just the name of the game. Now, as Meta steps into this business, we saw a pretty drastic move with names who also play in that business, like CoreWeave and Nibius. They got hit. I think Nibius was down 17% today. CoreWeave was
Yep.
down like 14%. Oracle was down. And then also you have to understand that Microsoft, Amazon, and Alphabet are also cloud infrastructure sellers.
Yep.
So the competition just got bigger. Facebook has a pretty Teflon balance sheet when it comes to revenue, when it comes to cash available to them as a business. So that's why some of these smaller players like CoreWeave and Nibius, whose balance sheets are not that strong, got hit pretty hard today. So I don't know what the play is for Meta. Like, to be honest with you, I really, really, really don't know. But maybe to them, they see a potential revenue stream or a potential way to lock in prices today without having to overspend and be dependent on other people in the future.
Yep. Yep.
Kind of like when, what example would I give? Kind of like when, Apple started creating in-house chips and pivoted away from Intel. Like maybe something along those lines where they're like, okay, we don't want to be dependent on third parties. Let's take matters into our old hands and start building the infrastructure um, for that now. So interesting pivot. I don't know how it plays out, but we know Mark Zuckerberg is not afraid to make big bets.
My man is not afraid to throw, not just make big bets, but throw money at it too. He is not afraid of doing that. But if Meta built one of the world's biggest AI infrastructure in its own part, like you got to just ask yourself, kind of like what you said, like the next step for that is selling access to other people. Like I really think that's a brilliant thing for them to do. Is like we build this for ourselves. Like you said, if we don't need all of it, we can go turn around and sell it to somebody else. But that means Meta is just going to become not just a social media company, but we kind of start seeing that transformation too. They went from a social media company to now an AI possibly company to now becoming like this giant AI cloud infrastructure company. So that's changing the whole business infrastructure. You know what I mean? So that's just going to be interesting for them, and hopefully it works out and they make a lot more money. So we shall see, man. We shall see. But let's talk about next week, man. Some of the economic calendars coming up. I don't see a lot of stuff. I do see something that's coming up on Monday, which is the ISM service, which is for the service economy. You guys gotta remember, like service economy make about 70% of the US economy. So think about like, your day-to-day service that people provide for you. That's 70% of the US economy. So it will be interesting to see if that's cooling or accelerating or more jobs being created there. So we shall see. The one I'm interested in is probably like that Wednesday, I think it's the 17th of July, FOMC meeting minutes. I mean, I think
Yes.
that's probably going to be the biggest thing that I'm waiting for. I don't know how the stock market is going to do until we talk, until that day comes. But overall, I think that is going to be the biggest day that everybody's going to be watching. So is it going to be the Fed is going to sound what they're going to say about inflation, how they're going to be concerned about labor market. Are they going to raise rates? Are they going to lower rates? Are they going to keep it the same? So that's going to be very, very interesting on that day. So
Yeah.
that's the day I'm watching forward to.
I also think what's going to be very interesting too, when you look at the minutes, is how does the perspective change of how they're looking at inflation under
Absolutely.
Warsh
Worse. Yep.
compared to Powell? Because I think the metrics of what they're looking at and how they measure inflation and all of these things, there might be some changes about new ideas about how to look at things, because I think that
Yeah.
that's one of the things that he was emphasizing with all these committees he's trying to commit to create and things like that. So that is yeah, that'll be very interesting to see.
Yep. Yep. So I'll keep an eye on that date, man, because I believe that that's probably going to be the date that we will see some stuff moving around. But overall, man, any advice going into like this first? I mean, this is a short week trading. Tomorrow is like the only day, and then Friday we have the July 4th holiday and all this stuff. So I think the stock market is closed. But do you see any like good entry into like some of the stock going into next week, especially with the full week coming up. So what is your take on the next week?
So let me give you some technical data to take a look at. So remember one of the things that I said when you look at long-term stocks is take a look at stocks that bounce off of the 50-month moving average. And a stock that has recently tested the 50-month moving average is Oracle. So if we look at Oracle, Oracle tested the 50-month moving average. What month was this? This was in April. It found support, moved higher in May, but it came right back down in June. Didn't quite test it in June, but we're in July now, and we could be testing the 50-month moving average again on Oracle. So right now, that 50-month moving average is 140.58. If we test it and it holds, that could make me somewhat bullish on Oracle. Because if you look at Oracle going back to 2017, this is a stock that has pretty much respected the 50-month moving average for the most part. So I'd be looking at that on Oracle. Now, I would say time has to be on your side. So this to me, this is not a swing trade. This is more so if you're buying leaps or buying shares. That's how I would be looking at Oracle moving forward. We may not test it, but we're getting kind of close to that 50-week moving average. Another name that has tested the 50-month moving average and has respected that move is Microsoft. Microsoft has tested the 50-month moving average 3 times: March, April, June, and it tested it again in July. Each time it has held. So if you are bullish on Microsoft, this could be a good opportunity if you want to take a long-term position in Microsoft to give it a chance to hit all-time highs. Because the way Microsoft has been trading, I think it's a little bit more correlated towards like software stocks compared to any other sector of the market because it's not moving with the AI chip names. It's not moving with the compute names. To me, it's more so on the software side. So
Right.
if Microsoft, that 50-month moving average, 379.89, we've tested it so far and it's held, might be a good time to get a little bit bullish on Microsoft. So yeah, that those would be two names that I would be taking a look at long term from here.
Yeah. And also with Michael Burry actually disclosing that he bought some Microsoft Leaps. I think he bought like 700 positions of it.
The 700 strike.
Damn.
That
Right.
might be the 20. I hope it's
I
2028
think
or
it's 2028. Yeah.
2028. Yeah.
Yeah, that's crazy. And also it looks like Ackman also has been loading up on some Microsoft shares and stuff. So there are some big names to start to look into those to those two stocks at least. So I'm
Yeah.
definitely keeping an eye on Microsoft. I've been talking about it for a while now. I was like, I needed to do something.
Yeah. I think Microsoft from a business standpoint is, how should I put it? They're in good position. Microsoft, in my opinion, comes down to execution.
Mhm.
The Azure business is their bread and butter. They also have the software business. They're in open AI. They've got a lot of partnerships in the AI space. One of the things that I will probably say with Microsoft is maybe they need to ditch the large language model business. What's the name of their? It's not Gemini. What's their name?
Copilot.
Copilot. I don't know if the Copilot. Yeah, I don't know if
They're
the co.
they're making some changes to it though. I think they're trying to make it more like the cloud infrastructure stuff. So I mean the cloud infrastructure. So
Okay.
there are some changes happening. I heard something about like Copilot Studio. I guess it equates to like if you look at Claude, Claude has that I think they call it Claude coding or Claude something
Hmm.
co-working, Claude co-working.
Okay.
in the middle of the way. You can actually connect some application to it and some connectors to it, basically. So I think that's what Copilot's gonna do. So I don't know. Hopefully they'll fix it. Hopefully it'll be able to compete with Claude and be able to compete with ChatGPT and all this stuff. But we shall see, man.
Yeah. I think I've been using Claude and ChatGPT, and I kind of like Claude. I'm
Claude
kind
is
of
good.
I'm feeling Claude a little bit.
Yeah.
But yeah, Microsoft and Oracle. Or the only thing I will say with Oracle that makes me a little bit wary is their debt. That's the thing. I don't think
Yeah.
Microsoft has not had to, dip into the too deep into the debt market to really grow their business. So if I were to pick one of the two, I would probably say Microsoft, but I think Oracle is probably going to be higher risk, higher reward, in my opinion. So,
It's definitely
I,
something to keep an eye on.
yeah, those are my parting words for today.
All right, man. As we head into this next half of the year, man, I hope you guys have been paying attention to how the year started and how the year ended. The year started with AI. I think the year is going to end with AI. Whatever infrastructure, whatever part of AI is going to be, I think the year is going to end with AI. But again, we have seen market rotate a little bit, in June, and now we're seeing probably some rotation going to happen also toward the next to half of the year. But also, man, don't forget that some of those big names that you're gonna see in the headlines, people start talking about it. They usually start out real quietly. Like people don't usually talk about it until the money comes in, and then you can start seeing it on social media. Everybody's talking about it. So keep an eye on the quiet names. I'm telling you, keep an eye on the quiet names. That's why it's so important for you to do your own research and to look at some companies that you're interested in and be where the money is. We keep saying this, be where the money is. The AI is a big, big place to be in. Break that infrastructure down. I think we did it in the beginning of the year. And I'm telling you, I do it again this half of the year. Break down the infrastructure down. We haven't even talked about power yet. We haven't talked about the cooling and all these different things. Those are going to come into play, right? Now we're focusing on memory. I don't know where we're going next. I really don't know where we're going next, but you will start seeing some of those names pop up and all this stuff. So
I think the next step in this has to do with power infrastructure and grid updating. I think that that's going to be a longer term move, in my opinion, because I think there might be some government red tape. You know, there might be
yeah.
politics involved with stuff like that.
Oh,
But I,
absolutely.
I really think that grid infrastructure is still a big piece. And I also say I think this weekend is a big weekend for nuclear energy.
Yep.
I think this weekend is a big weekend for nuclear energy. So
Yeah. Take
we'll
that
see
with a
what,
grain of salt.
take that with a grain of salt. Do your research on why I said
Yep.
that. But this is a big
Yep.
weekend for nuclear energy. So
Yep. Yep.
we
Yep.
we
Yep.
we shall see what happens
Yep. But
come next week.
if you guys enjoyed today's episode, please do us a favor, man. Hit that like button, subscribe, follow us, the Wall Street Rundown, and please share it with someone who's serious about investing. Every week, man, we try to break down the headlines, try to connect the dots for y'all. Like we literally do try to connect the dots for you and help you guys kind of stay ahead of the Wall Street and all that stuff. So again, we'd love for you guys to drop us a comment. One of the questions I'll ask you guys, if you feel like what sector do you think is going to lead the second half of 2026, please let us know. Drop it in the chat, send us in a DM, let us know exactly what it is. But with that being said, man, yeah, have a good night. We'll talk to you guys. Well, are we going to do Friday or do you want to?
Friday, I think market's closed Friday.
Marcus close Friday. So we
Yeah,
skip
so
Friday. We'll just
yeah,
come
we'll
back
skip
next
Friday.
Wednesday. Yep.
Be back
But
next week Wednesday.
do your research about this weekend, what's going on with nuclear energy, and hopefully you guys can be able to execute some stuff tomorrow. With that being said, y'all have a good night. We'll talk to you guys Wednesday.